Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way to exit highly appreciated assets tax deferred so you can create, preserve, and grow your wealth. I'm your co-host, Petersen York, filling in for Brett Swarts. And each episode, I'm joined by some of the best wealth, business, leadership, and real estate individuals in the world to share ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. As always, we're streaming on the Expert CRE Secrets podcast and the Capital Gains Tax Solutions YouTube channel. So please hit the like button, subscribe button, notification bell. Really helps out the channel. Thank you so much for doing that. Our next guest is a real estate entrepreneur. He's got a ton of knowledge and just value he's going to add to us. So we're going to dive in and get some of the wisdom that he's got. And so please welcome Gabe. How you doing, man?
Hey, yeah. Thanks for having me on.
Absolutely. All right. So Gabe, give us a 2-minute synopsis of your story.
Let's see. Let's condense it down real quick. My story kind of mirrors a lot of real estate guys out there. When I graduated college, graduated like during the crisis, 2009, and couldn't find a job. So I went into corporate, didn't like it. And so I started doing all these different things like, I did a lot of things. I opened an e-commerce store. I opened a t-shirt store. I did digital marketing, all those ads that came on Facebook that said, oh, do this business, you'll be a millionaire. I tried them all. Didn't really like any of them, but it wasn't until I flipped a house out in Tacoma. Me and a buddy flipped a triplex in Tacoma. We made like $87,000 on that. It was the most I'd ever seen in one check. And I was just like, okay, this is the way. So I kept going down that path in residential. I was doing flips, wholesales, that kind of stuff. But then I kept working corporate. And then in 2018, 19, something like that, I left corporate and I switched focus and I went into commercial. I bought some mobile home RV parks. And then 2 years ago in 2020, I believe, maybe it was late 2019, I switched over, 2021, I switched over to self-storage, and that's what I'm doing now.
Rad. All right. So there's a lot to unpack there, but what are one or two strengths or spiritual gifts that you have that have led you to be successful?
I think the biggest gift, well, I don't know if it's a gift, but the thing that I've developed over time is just the ability to keep going when shit hits the fan. And everybody out there who's in real estate knows that shit will always hit the fan. It's always going to go wrong. No matter what your plan is, if it's perfectly laid out, things will go wrong and you need to be able to just keep going forward. And I feel like that is something that's really, really helped me in my journey because, real estate, so many things can go wrong and they always do. So just having the ability to continually move forward and have persistence is probably my biggest strength in business.
So you got that perseverance, which is, absolutely vital. I don't think there's ever been a real estate transaction that has been smooth.
Yeah, I know, man. I was actually just thinking that yesterday. I'm selling 2 of my properties, 2 of the flips. We finished them up and we're doing, we're selling them off. And these properties, I've had so many issues with them along the way, but eventually you get the sale and you can get up that little synopsis like, hey, I bought it for this and I sold it for this. We made money. There's so much that happens between those 2 periods that nobody sees. But it is, it's always a lot of things going on in real estate, but that's what makes it fun.
So let's just unpack that a little bit because like the perseverance aspect of the real estate, transaction, real estate looks pretty sexy, right? On Flippy Flop or,
HGTV,
$1 million listing or Selling Sunset or, I think they have like, Motel Flipper now or whatever, right? Like all these things, and they're filmed and Hollywoodized and all this kind of stuff, right? Like an actual transaction weird random crap just like pops up. Like I'm in a transaction right now and we're supposed to close today, but the UPS missorted the deed.
Oh yeah.
Like
See,
what?
you couldn't have planned that.
who,
It just happened.
like what happened? Like what? I was telling the buyers, I was like, guys, I don't think I've ever had a transaction go smooth. And if it does go smooth, there's something wrong with the transaction.
Yeah. You
Yeah.
shouldn't have been buying that property if it went smooth.
Something, right? There's always something. And so speak to that a little bit for someone who maybe is like new, is thinking, oh, I'm gonna go in, I'm gonna absolutely like crush real estate, make $100,000 a flip, and go. Like, what advice would you give that person?
Yeah. Well, first of all, you can definitely crush it in real estate. That is 100% true. But to do that, you need to do more than you think you need to do. You need to have volume in every aspect, especially when it comes to sourcing deals. I feel like that's an aspect that a lot of people don't. Well, I mean, if you're in real estate, you do put a lot of value on it. But before I got into real estate, I didn't realize how valuable and how much effort is required to actually find a good deal. Um, all the good deals that I've bought have been off market. Actually, that's not true. I bought one that was on market, but that was through a broker who I got connected with from a different deal that I did, yada, yada. So most of the deals that I find that are good are off market, and it takes a ton of effort to find good off market deals. You have to do a lot more marketing than you think. You have to have 10 times more calls than you think you're going to need. So you can definitely, and that's where, finding a good deal, crushing it in real estate really does start with finding good deals. So you can definitely do very well, but you need to just put in a lot more effort than you think. But if you do, it will, the results will come. And I found over my career, there's been ebbs and flows. Like I'm consistently putting in the effort, but sometimes I'll go months without finding anything, and I'll just be sending out offers and nothing. And then all of a sudden I'll close 3 deals. Obviously I'm looking at bigger properties. And so if you're doing single family, you'll probably be able to increase the volume there. But I'm in the commercial side. So long story short, or a long way to say, just you can do very well, but you need to have systems in place, and you need to do a higher volume, especially when it comes to acquisition side, than you think.
Yeah, no, absolutely. What does your day to day look like?
I don't really have a day. Like my day varies depending on the day of the week, really. At the beginning of the week, on Mondays, we always meet that my acquisitions lead. We go over all the high priority leads, and we or deals, and then we review them. We send out offers. On Tuesdays, I usually meet with my property managers to do the portfolio analysis. So for self storage, we have a third party property manager. I'll meet with them and just go over how the self storage side of the portfolios is doing. Apologize. And then Wednesdays, Thursdays, Fridays. Fridays are my podcast days, and those are the days that I really just reach out to people, reach out to brokers, and just connect with people. Thursdays and Fridays, I don't have anything specific planned, but I just do whatever I need. I'll have my goals for that week, and whatever needs to happen, I'll fit it into Thursday and Friday. Or
Yeah,
Wednesday, Thursday,
interesting.
yeah.
So, okay. So are you doing like a lot of like personal, like picking up the phones, calling people, um, or have you kind of built the systems in place now to where things are kind of rolling and you got higher priorities as opposed to lead gen?
Yeah, so I work with some acquisitions guys that are on my team, and so right now what I'm mostly focused on, I do the final underwriting, and so when a deal comes my way, I'll be the one to finalize the underwriting there and make sure that it is a deal worth pursuing. Um, I will do the kind of the final negotiations with the seller, so I'll just make sure everything's kind of buttoned up, send it off to title and escrow, and then what I'm focused on right now mostly is raising capital, because when you're in real estate, everybody's career kind of follows a similar path. If you want to, expand, if you want to really grow a portfolio, you'll start off in doing wholesales, doing single families, whatever, buy a few rentals. And then you'll try to expand, add a few people to your team, get a VA, that kind of thing. And then eventually you realize, okay, I ran out of my money. Now I need to get other people's money to put into these deals if we want to continue expanding. And that's kind of the point that I'm at right now. I've done really good with negotiating seller financing and stuff, so I could buy quite a few properties with little money down. But the past couple of deals I've had to raise capital on, and so I'm at the point where I'm realizing this is my role now. I need to be raising capital to source or to finance deals.
Fun deals. Given the economic landscape that we're currently in, how have you changed your strategy, if you have, from, I guess, pre-pandemic, right? Pre 40% increase in dollar supply, in the United States with the inflation, the debt. How are you navigating this whole economic situation we got going on right now?
Yeah, I'm not really changing my strategy, because I always look for really good deals. I don't want to buy just kind of a mediocre deal. So my underwriting has always been pretty conservative, and that hasn't changed. I'm still, underwriting relatively conservatively, and I think the one thing is I've sold off a couple of properties because I want to have more cash on hand, because I do want to pick up some of these better deals that will, eventually come down the pipeline. Um, but I really think, that's the only thing in terms of how I've experienced it. There's definitely been there was that period in the market where seller expectations were at the 3% interest rate, range, and so they expected a $10 million for their property, whereas now at up to 7% interest, they're going to get $4 million, $5 million, whatever, for the same property. And so we're in that weird zone right now where expectations are a little bit misaligned, and so there's just not as much deal flow.
Right.
Because I'm underwriting these deals and I'm assuming, hey, we have to put debt on this property. It's going to be at 6% interest. And so this is what I can offer you. And they're like, no, I want this because this is what I could have gotten a year ago. So the number of sellers who are actually within range to sell their property at a reasonable cap rate is not. There's not as many out there right now, but it'll change soon.
Yeah, I'm hoping that it does, and it sounds like what you kind of said there last. The cap rates are, we're super decompressed. We're out in LA area, right?
Yeah.
Where they were like 3%, 3.25%. It's stupid.
Ridiculous. Yeah.
It
Who wants to
doesn't
buy
make
that?
any sense. Like at 6.5% debt, they've decompressed a little bit, but I mean it's nuts.
Yeah.
And people are like, "Oh, I want a 4 cap." I'm like, "Why?" Like, what? It doesn't make no sense, man. Like, go to Arizona.
Yeah. Yeah. I try to walk sellers through my underwriting. I'll even show them what I do. And I'm like, hey, if this is your asking price, if I do that, I will have a negative cash flow. So this is why I can't offer you that price, because obviously I can't run a failing business. I can't buy something that's going to be losing me money. And most people are understanding and they still hold out for some reason. So we'll see how things change.
Well, it's a FOMO at this point, right? Like they missed out and they're grasping at straws to try and get it because they realized their property was worth 10 million and now it is only worth 6 million. That's a 40% drop, right? Or 7 million, right? 30% drop. Like, and it's just buyers have been priced out. You said that you sold a couple of properties recently to get liquid. So let's talk about that a little bit. Did you have those super high expectations as a seller now that you're in that camp?
No. I'm always I sold them with seller financing, and so I just wanted the down payment, and I I feel like seller financing works really well for both parties, even as a seller, and that's what I offered the buyers. These properties they were small self storage facilities, and so I flipped them. They're in really bad condition, and I put some new paint on them, fixed the issues, put some security cameras, security fence, all that stuff. And then I sold them off, but they weren't filled up, and so the NOI didn't support a super high price point, and so I sold them above what they should be, what they would sell for at a cap rate basis. But there's the upside. So in order to do that, you can't put debt on it because no bank's gonna give you money to finance a deal that doesn't have the NOI to support the cap rate.
Sure.
So I financed it myself at 5% interest below what market rate is today, and it worked out that way.
What kind of down payment are you taking?
10 to 20%, depends.
So you got $1 million storage facility. You're taking $100,000, put it in your pocket, get some liquidity, and then financing the rest at 5%.
Yeah.
Are you doing like a balloon payment at the end of a 5-year note, or how are you structuring the financing?
Yep. There's a balloon payment at the end of 3 years.
3 years.
And 3 years with an option to extend 3 years if the federal the interest rate has not exceed or is not below what we negotiated, below 5%, below 6%, whatever it is.
Mm-hmm. So you negotiated based on the macroeconomic factors of where the interest rates will be, giving them an option to extend, right? Should they not be able to refi?
Right. And so in 3 years, I'm assuming the interest rates. I have no idea. I'm not a really big macroeconomic guy or anything, but my assumption is that the interest rates will have decreased below where I offered the 5% interest.
Sure.
If they're not, then they get another 3 years. And I'm still getting the payment, so it doesn't matter. And it's interest only, and so it's all interest. And at the end, I get the full principal balance.
Yeah, that's a good way to do it, and it's it's interesting because at that point, right, you don't have the tax, burden right now. You'll pay a little bit on the $100,000 that, or whatever. I'm just using that number, but that $100,000 or whatever, right, that you'll do. It sounds like you left some meat on the bone for them, but with the strategy of, well, I'm going to seller finance it, so I'm going to catch a little bit of a premium for it, get them in with super low down payment. I don't have to fill it up.
Right. Yeah, and I mean that's another thing that it's difficult to make that decision. I mean, it really depends on your strategy. These particular facilities, they were in Arkansas or Hot Springs, Arkansas, and Lubbock, Texas. I didn't own any other facilities or any other properties in those metros, and so that was the leading, motivation for me to sell them, because when it comes to, I mean, any property you own, you get economies of scale when you have multiple properties in the same area, because then you can use the same team to help maintain them. And I couldn't, I looked forever to find another good deal, another good self-storage deal in Lubbock, which is funny because they have one of the highest net rentable square feet in all of Texas in terms of cities, but I couldn't find another good deal. And so I just got to the point where I was like, all right, I'm either going to sell this I decided that I was going to sell it because I couldn't find another deal. I have deals in multiple properties in Dallas. So that, that metro in my mind has been solidified, and now I'm just going to keep those forever. And in Indianapolis, I got multiple deals. And so, once I get one deal in a metro, if I can expand my footprint there, then I'll just keep them. But now if I haven't been able to, or if I decide I don't like that metro, which happened with Hot Springs, then I just decided to sell them.
So you come from a flipping background, so you're used to picking up an asset, putting work into it, CapEx, whatever, right? Turning around and selling it. But then you just said that you have metros that you really like where your strategy is now buy and hold for the long term.
Yeah.
Are you kind of moving away from a flipping mentality and moving more towards a buy and hold as you kind of grow and scale?
Yeah, my mentality has never really been flipping. I actually don't like flipping. But each property the exit strategy for each property will be unique to that property,
Sure.
depending upon tons of factors. And so some of them I flip, some of them I don't. Single family, they were all flips just because I didn't want to own single family.
Right.
But in the commercial side, it's really dependent upon what my strategy is overall and what I'm trying to accomplish. I mean, the end goal is the goal right now is to create a massive self-storage facility or self-storage business. Honeycrisp Self-Storage is the brand, and I'm trying to build that out. And so we're just trying to buy more properties, but in metros that I want to own properties in. Arkansas or Hot Springs, there was massive property damage issues, like property crime. And I knew that slightly going in, but I didn't realize to the extent at which it was, is happening. And so I just decided it's not worth it. And then Lubbock, I couldn't find another good deal in there. And so decided to change routes.
So what markets are you currently looking in, or that I know you mentioned Dallas, but what else are you really gung-ho
on? Dallas, we're looking pretty hard. Indianapolis, we have a good footprint there, and so we're looking to find more. I live in Washington State. I've always been looking in Washington, but I can't swear. Washington's like or Seattle's like LA. It's like they want a 0.1 cap rate. It's like, come on, man. So I haven't been able to find a really good deal in Washington yet, but that's definitely I'll look there. And then if there's ever like just a good deal specifically, we're all opportunistic when it comes to real estate, and so if it's a good deal, I'll probably buy it. But if it's not great, then I really want it to be around a metro that I'm focusing on: Indianapolis, Dallas, Austin, San Antonio.
A lot of Texas.
Yeah, we're really focusing on Texas. Yeah.
Interesting. Okay. When you do exit, right? I know we kind of talked a little bit about the seller financing portion of it, but how else are you, dealing with the capital gains issue?
So seller financing is pretty much my strategy is using seller financing. We've considered 1031, using a 1031. We were going to sell we were in a contract to sell 2 of our mobile home parks before interest rates raised, and then the buyer backed out. But when we were doing that sale, we were going to use the 1031 to buy a apartment building downtown Seattle.
Gotcha. So you got the 1031. I know that you had Brett on your podcast already. By the way, guys, follow the Real Estate Investing Club podcast.
Appreciate it.
Yeah, it's a good deal over there, guys. So you can find that on Apple, Spotify.
Yeah, anywhere you can find a podcast, we'll be there. The Real Estate Investing Club.
Where else can you find podcasts? Apple, Spotify.
There's actually
Android.
There's like tons of them.
YouTube.
Yeah, I mean Apple, Google has a podcast. There's Castbox, Spotify, Stitcher, Overcast, Buzzsprout. Tons of them.
Go follow the podcast. It's a good podcast. As you guys can probably tell, Gabe's over there just knocking down doors,
rocking and rolling.
Interesting. So, anyways, yeah. So Brett's been on the show, so I'm sure you're familiar now with the Deferred Sales Trust and a little bit about what it can and can't do. Talk to me a little bit about the strategy for using a carryback versus like a Deferred Sales Trust. If and kind of the pros and cons of each one.
Seller financing.
Seller financing, yeah.
Gotcha. Yeah, I wasn't super familiar with the DST until Brett came on the podcast, and so I'm by no means an expert, and so I don't want to try to give any advice to anybody because it's not something I know. And so, I mean, seller financing, it's always good just because you can. It's easier to sell a property with seller financing because then the buyer doesn't, the buyer doesn't have to go out and get financing for the property, especially properties that aren't at they haven't been stabilized, so they're not at maximum capacity with market rates, all that stuff. Seller financing makes it work. But if you've already stabilized the property and you really want to level up and you want to take that equity that you have and put it into a bigger property, which is a great strategy for anybody who's in commercial. They want to get to, that 100, 200 unit apartment building, the 1,000 unit self-storage facility, whatever, the acre of industrial properties. A good way is to buy a smaller property and then leverage the equity that you build into that property into a bigger property, and leverage that equity into an even bigger property. And the ways to do that is through things like DST and 1031s.
Yeah. Yeah, no, absolutely. One of the things with, you brought up a really interesting point there, right? Like the property is easier to sell through seller financing, right? If you have it not totally stabilized and so on and so forth. So, and by the way, none of these strategies, right, like are the wrong answer, right, in certain situations. There's times when you would want to use seller financing, like, when Gabe, like you have like a property that's not fully stabilized and it makes the sale and it makes the deal, like, yeah, sweet, right? Like get it done, right? Sometimes you find an up leg with a 1031 that just makes a ton of sense. Like, great, use the 1031. Like, it's phenomenal, like strategy. Like all of these strategies, right, have their place. So it's not like one is like supreme ruler of them all. There are benefits, right, to each one, and there are pros and cons and so on and so forth. And we believe the DST, or the Deferred Sales Trust, right, has a lot more pros than it does cons. One of the things that we've run into with the seller financing aspect of things is sometimes, right, when you're basically giving that particular asset's value to somebody else, right? Now they're paying you, but should they not pay you anymore and you have to go foreclose and they didn't take care of the property, right? You get a devalued property back, right? And now you got to go and you got to put capex in and you got to fix it and get it back up to where it is. Now, that might not be the worst thing ever, right? But a lot of your payments might go back into fixing that up so you could turn around and sell it again, right? So the other thing is you don't get all your capital up front. Yep. Now you do get cash flow, right? If you're getting 5% interest only on $1 million, like that's 50 grand a year, like deal, right? Like, so, it just kind of depends on what you need and where you're going. One of the things that's nice with the Deferred Sales Trust is it's like kind of agnostic. So you can take all the capital, redeploy it, and wait on the sidelines till you find a good deal, and then go back into real estate when you want. And so, like I said, there are all these different strategies, right, that you can use. And that's why it's important to listen to podcasts and stuff like, the Real Estate Investing Club podcast, or the Capital Gains Tax Solutions podcast, or Bigger Pockets, or, Lifetime Cash Flow, or whatever, right? All of these different people that are super smart that get together and go over this kind of stuff. Like, hey, like, you brought up a great point. Seller financing can help a deal close.
Yeah.
That's like the most important thing, right? Like if you can't close a deal, who cares what the tax strategy is? Because you're not going to be paying any tax.
Yep.
Right. So
yeah, and eventually you're going to have to pay the tax. Seller financing just defers it without having benefits of that taxes. I mean, eventually, year 3, you're going to have to pay the taxes. I actually don't know how seller financing works. I don't even, is it compatible with the DST? Like if you,
it actually is seller financing technically.
Oh, interesting.
It runs off the same. The Deferred Sales Trust runs off of IRC code 453, which is an installment sale, which is seller financing.
Oh, interesting.
It actually is. It's a form of seller financing. The difference between a Deferred Sales Trust with the seller financing is that the Deferred Sales Trust interjects a business trust in the middle. So what ends up happening is you have a property, right? And you have an ultimate end buyer. And before you sell that property to the end buyer, you sell that property to the trust, and the trust will turn around and write you a note at 100% seller financing plus a pref, right? Your interest rate. And then that is cash flowed. And then the asset is then liquidated to the actual end buyer, right? Who then funds the trust, however they're going to fund it, whether it's financing or it's cash or whatever the deal is, right? They're going to fund the trust. And then you get to go ahead and direct where the funds are reinvested. So
gotcha.
When it comes time, right, what's nice about it is you don't have time constraints like you do with the 1031. With 1031, you have this idea that you got 45 days to identify, 180 days to close, and you got to go back into like kind, which means if you're selling real estate, you got to go find a real estate deal. And how hard that is to do.
Yeah.
right? Give yourself 45 days. If you haven't already identified it, it's really, really tough, right? And a lot of times what happens is people get into this situation where they're motivated buyers. They're backed into a corner and then they got to make bad decisions. So they end up buying the 4% cap rate in LA because they got nothing else to buy. And they don't want to pay the 30% or 40% tax. And so they're like, F it.
Yeah.
You know? And at the end of the day, they realize, crap, like, this wasn't a good deal. With the DST, right, it gives you flexibility and time freedom. So you don't have to be that motivated buyer. You can invest that into stocks or bonds, or when you find the right deal, right, in Dallas versus, Fayetteville, right, you could go ahead and you can put it right back into the deal. So super powerful strategy. It's awesome. But like I said, right, each strategy has its merits, right? And there's a time and a place to use each one. A traditional seller carryback, right, in order to get the deal done might be the ticket.
Yep.
Because it gets the deal done, And so it just depends. That's the beautiful thing about this whole thing. It's like a little puzzle. You get to put it together, and it's part of the fun real estate transaction.
Yeah, the key is just to know all the puzzle pieces available to you.
Right.
And so if you know things like the Deferred Sales Trust or 1031 or seller financing, those are all tools in your tool belt that you can pull out at the right time, at the right situation.
Yep, absolutely. It's imperative. Awesome. All right. Well, Gabe, we're getting up on our time here. So, do you have any sort of like party? Where can people find you?
Oh yeah, the best. We have the podcast, Real Estate Investing Club. It's completely asset class agnostic. We have people that flip farms, We've had a guy that flipped wineries come on the podcast at one point. So it's all over the place. Cool. I specifically do self storage, mobile home parks. So we've got a lot of those guys. You can find us at therealestateinvestingclub.com and then all Spotify, Apple Podcasts, all that jazz.
Awesome. So yeah. And you're host of the podcast, the Real Estate Investing Club podcast. You can find that. We already kind of went over that, but everywhere podcasts are. I didn't realize how many there were, but apparently there's 12 of them.
All over the place.
Yeah. Apple for sure. Google for sure. Spotify are probably the three big ones.
Yeah.
Flickr, Switcher, or whatever they're called. Awesome. Okay, cool. And if you guys want to learn more about the Deferred Sales Trust, you can come to our masterclass by going to capitalgainstaxsolutions.com and signing up for that. It's every Friday at 10 a.m. Pacific, 1 p.m. Eastern. Sign up, come, ask questions, bring your CPAs and your financial advisors and your tax attorneys and estate planners and all your people who are going to tell us that, they've never heard of it before and they're crazy and all this kind of stuff. And then we have to tell them that they're not. And it's a whole fun game that we get to play like every single time. So education, right? Yeah. So we get to, gently kind of like show them what's actually going on. And then 9 times out of 10, they join us. So go figure.
There you go.
So anyways, you guys can find out more about that. Go to capitalgainstaxsolutions.com. As always, you can rate, review, and subscribe on the podcast. You can check us out on the YouTube channel. Gabe, you guys got a YouTube channel?
We do. Shoot, I should know it. I don't know what our YouTube is.
The Real Estate Investing Club podcast. I'm sure you'll pop up.
There you go. I'm sure that'll pop up.
So go rate, review, and subscribe, and follow his podcast for sure too. All right. So Gabe, any final words of encouragement, advice, wisdom? What do you got?
Yeah, if you guys are in real estate, if you're thinking about doing real estate, every single guest that comes on my podcast, I always ask them, what's one thing you could tell your younger self? They all say, I wish I got started sooner. So if you're out there, you're driving your car, you're thinking about getting into real estate, do it. Go out there, buy your property. Don't wait. And and if you're already in it, just keep going. If you haven't reached your goal yet, if shit's piling up and you're getting hit in the face, all you got to do is just put one foot in front of the other. Eventually you'll get to where you want to be.
Yeah, absolutely. So I'm going to flip that question on you in the last one. Is the answer for you get started earlier?
Oh yeah. if I were to give myself, my younger self, absolutely, it actually would be, well, no, it would be get started earlier. The problem is, when you don't have the education, and I didn't, it took me a while to find a mentor. it's hard to get started. And so I guess I would tell myself to go out there and find a mentor earlier.
From a philosophical standpoint, do you think you would have been ready younger to do what you're doing now?
I think yes, because not at when I first started, but whenever you start something new, everything that you do adds on to what you did previously. And so if you get that process started earlier, if I got that process started 10 years prior to when I did, at that 10-year mark, I would be 10 years into it. And so I'd have 10 years of experience. And so the earlier you can start anything, any skill-based thing, the more skills you'll have as time moves on.
Sure. Right on. All right. Well, Gabe, thank you so much for coming on the podcast, man. Really appreciate it, guys. Make sure you check out the Real Estate Investing Club podcast. Check out the mastermind. Go to capitalgainstaxsolutions.com for that. And definitely check out Gabe's website, therealestateinvestingclub.com. Yeah, thanks again, everybody, for watching another episode of the Capital Gains Tax Solutions podcast. As always, we believe the most high net worth individuals and their professional team struggle with finding great capital gains tax deferral options. Not having a clear plan is what's really the enemy. So have a strategy, right? Use things like seller financing or a deferred sales trust or a 1031 exchange or a charitable remainder trust or whatever it is, right? Have a strategy so that you can go out, you can create, preserve, and grow your wealth. Thanks again for watching, everybody. Please rate, review, subscribe. Really helps out the channel. And we really appreciate all your feedback and love. So see you guys on the next one. Gabe, thanks again, man. Appreciate it.
Thank you.